April. Normally it'd be tax day, but we're on lockdown. So that's been pushed out for us. So yay. Anyway, here to run through the markets. We're going to talk about what's happening in the futures market, what's happening over in the foreign exchange market, pop over to crypto, and then we'll call it a day and let you guys get back to things. The purpose of the calls, the market reviews, is just to give you some ideas around things that you could be trading, show you that simple strategies can and do work as long as you work the simple strategies, as long as we get the head trash out of the way and forget about what we think should happen in the marketplace or what we hope should happen in the marketplace or what all the talking heads on TV are saying is going to happen in the marketplace. Develop a simple strategy, follow it, give yourself a little advantage when you look at the money management side of things, and you're golden, right? If you can follow those rules, there's the mindset piece. If you can follow those rules, you're golden. So let's pop over and look at what's happening over in the futures market first. We'll begin up here in the top left quadrant, which is the E-minis. It's the S&P, and another day, another up day yesterday in the S&P. And of course, what you've got right now is everyone still calling the top. I don't know why it should be going up, and I agree. I don't know why it should be going up either, but it's irrelevant. What we think it should be happening is absolutely irrelevant when it comes to trading the markets. Do you want to be right, or do you want to be rich? Is a quote that I've heard in the past around that. When folks are trying to call the tops, trying to call the bottoms, or trading based on their quote instinct as opposed to trading in the charts. And 100% that is a very true quote, and I think all of us can speak from that experience. If you've been trading for any length of time, you know that when you deviate from your trading plan and trade by emotion, that's when you're typically not so successful. You might have a home run or two based on that, but the long-term aspects of that typically aren't too profitable. So anyway, I don't want to go off on long tangents today. I'm going to try to keep it concise. So where are we today? So yesterday, we talked about looking for buying opportunities because we were in an upward trend. Our 4-hour trend is up, and our 30-minute trend yesterday coming into the day was up as well. The biases were up. So we talked about, we could look for pullbacks to key areas. So if you're doing a buy, like a bounce style strategy, you probably wouldn't have been in because you would have been waiting for it to pull back to a key area. Never did that, so you wouldn't have traded yesterday. We also talked about breakouts, breakout strategies. Great way to go. We talked about breaks of key areas as we came into the new market session. So we had a break of a key area up here as the new session began. So a couple opportunities to play off of that breakout on there. And then for those that are looking for that combination strategy where you're trading both the combo breakouts and pullbacks, we talk about a strategy where you can implement that on look at your trend, your bias on a 30-minute scale and then trade it on a 5-minute scale. Opportunities there as well to look for pullbacks and then see if we get a break of that smaller level candle back in our favor. And there's going to be times when you're going to be wrong about it, right? So we're pulling back here. Maybe you would have entered, you would have been wrong. But then we would have re-entered long here and you would have been right. So with every trading strategy, you're going to have series of wins, you're going to have series of losses. It's not always going to be enter a trade and have a home run. That just doesn't happen. But enter a trade, have your profit targets. Look at something that's 2-to-1 at a minimum, 3-to-1 probably a little bit better, and give yourself the breathing room to allow that trade to move. And that's there we go. So coming into today, what's going on? Well, coming into today, markets have opened below the previous close. So we're showing short positions coming into the new session. It'll be interesting to see. We've still got an hour and a half to go before the regular trading hours begin. So it'll be interesting to see what really happens here. At this point, though, we do seem to be turning over until this crosses. I'm just using a very, very basic strategy to look at what the bias is in the marketplace. I'm simply looking at 2 moving averages. There's no secret there. I'm looking at a short-term moving average, which is a 20, and then I'm looking at a longer term, which is a 100. So I'm looking at a moving average based on the last 20 bars, and I'm looking at a longer term based on the averages of the last 100 bars. And when those cross, that's telling me the bias is changed on that specific time frame. Right? So if this continues to close down, these will cross over, and it may actually cross over prior to entering those regular trading hours. If it does, at that point, my 30-minute is going to conflict with the 4-hour bias, right? The 4-hour bias is still long. It can be a while before that changes, unless we have a really big move down, right? It's going to take a while for that long bias to change. So what do you do with that? Well, 2 things, depending on what your trading strategy is. If you're saying, hey, my trading strategy says that I only trade when my biases are in line with one another. So, if we've got a 4-hour bias that's long and we have a 30-minute bias that's short, then you stop right there and you go do something else, right? Because the more you stare at the screen, hoping something's going to change, it probably won't. And number 2, the longer you stare at the screen, the more likely you are to start trying to force the trade. You're standing there, you're staring at the screen. Man, I got to make something happen. I'm spending all my time right here in front of the screen. Set an alert or something and just go away. And if the bias changes and it goes back, to where they're equal, you get an alert. Hey, that 30-minute bias has changed to long. Okay, let's go back and see what's happening in the marketplace. Don't stand there and try to force a trade. So anyway, if your trading plan says you only trade in the direction of the confirmed bias, then you don't trade it. Right now it's still, the bias hasn't crossed. Right now it's still until this crosses, it's still an upward trend. And very often, like look at yesterday, or I guess that was Monday, end of Monday. It's coming down. It looked like it was going to cross here, but then it ultimately, didn't. So same thing here. This could very easily, coming into the session, we could see something rally, prior to regular trading hours. Will it? I don't know. Probably not. But could it? Yeah, of course it could. So just wait and trade what your trading plan says. Now, if you're trading on something shorter and you're saying, hey, I'm going to use my 30-minute bias and I'm going to take trades that are in the direction of that current bias, then of course, you would utilize whatever's happening here as this changes, right? But for right now, it's looking like by the time we get to the regular trading hours, we may have a little flip. We may have our biases may not be correlated, may not be in the same direction. So do with that what you will. At this point, if this does look short, if this starts to show us a short bias, then what we would be doing is we'd be looking for potential short trade opportunities, which would mean we'd either look for a pullback to a key area or look for breaks below key areas. So, if it does end up flipping over and we're looking to short the market today, then we'd be looking for pullbacks, 2800, 2810, or breaks below 2880 in order to be able to trade with that shorter term trend that could be down. But again, trading with the trend can be looked at in different ways. You want to really check what or have a trading plan in place and check what your trading plan is. If it's only trading the direction of the confirmed bias on multiple time frames, then of course do that. Don't change it just because something's happening today and you feel the need to trade. I cannot reiterate that enough. Don't force trades. Don't chase the market. Don't trade just because you feel like you need to trade. Trade what your trading plan says. Over on crude, we talked yesterday. Crude's in a downward trend. A 4-hour is down, 30-minute is down. It's continuing to move. We had a little bit of a rally last week and earlier this month as there were some rumors of talks occurring, and obviously it's all BS. You know, buy the rumor, sell the fact. That's another adage there. So obviously things have been occurring, facts have been coming out. Oil is not needed. Production is being cut here and there, but there are some countries that are refusing to cut production, and oil is continuing to tumble. We're back into the teens. We were just there. We're back in the teens again. We're below 20. Again, you're going to hear folks calling the bottom. I have to tell you, it's a dangerous game to play, because, folks were calling the bottom when it hit here at 45, and they were calling the bottom when it hit 35, and they were calling the bottom when it hit 30, and they were calling the bottom when it hit 25. So that's a pretty freaking dangerous game to play. Everybody wants to be the hero and call the bottom and catch that absolute bottom run all the way back up to 45 or 50, but the reality is you're stepping in front of a train, and unless you're Superman, you're not going to stop the train. It's going to run you right over. So, again, I'm no superhero. Just trade what the market tells you to trade. Don't worry about what your gut thinks is going to happen, or your buddy thinks is going to happen, or your friend of a friend's grandma who's married to, so-and-so's brother who's in the oil market says oil's going to do this. Bullshit. Just trade what the chart says. Okay? So, chart says, I started getting off on rants, because I just hear so much of this stuff every day, man. It just drives me crazy. So, the 4 hours down, the 30 minutes down. So in this case, we'd be looking for selling opportunities. And again, what does that mean to you as a trader? It means to look for selling opportunities based on your trading plan. If you're trading a bounce strategy, you'd wait for it to pull back to a key area, 20, 50. Look for areas for it to pull back to, and then take it short off of that. If you're trading a breakout strategy, you'd wait for it to break a key area, like 1950, for example, and see if it breaks through that key area, and then take it short from there. If you're trading some combo strategy, do whatever that strategy tells you to do based on the time frames that you're trading, and obviously the research that you've done. We've talked a lot over many weeks. This channel's about a year old. I've been doing this for about a year now. I've been preaching the exact same thing since I started. It's mark your charts, trade your charts, have a process for what you want to trade. And I've taught 3 very basic and different trading strategies that you can implement. Just fine. I can't tell you which one is best for you. They all have pros, they all have cons. And then for money management, they all have pros, they all have cons. I can't tell you, there is no quote best strategy, because the best strategy is the one that you're going to stick to and you're actually going to implement. So you've got to do the research, you've got to do the homework. We talked about it last week. We had a long weekend. Perfect opportunity to do the homework. Go through, look at the different strategies, back test them in over multiple months of trades, and figure out which one you feel has the best fit for your personality. Then document that strategy and implement it every single day the same way. And again, I know that's so much easier said than done. I struggle with the exact same biases and fears of missing out and fears of loss and everything else. So I know it's easier said than done. But if you can do the work and put in the time and the effort to plan your trades and trade your plan, you're going to be ahead of 95% of the retail traders that are out there. Gold took a little bit of a hit yesterday. Still, we're hanging around 1750 right now. 30-minute bias is kind of right at it's not crossed over, but it's pretty much, they're just hanging right together here. The green is a little bit above the red, so our 30-minute bias is still up, which is in agreement with our 4-hour bias here. So for gold, we're still looking for long opportunities if you're trading, based on the bias. Both biases are in agreement, And if we're looking for that, we'd be looking to take long opportunities. What does that mean? Well, again, what it means is we can look for key areas like 1750 here to bounce off of, if you even want to wait for it to pull back to 1740 or even 1730. If you're looking for key areas for it to pull back to, 1750 has been on the chart for a while. Look for a pullback to 1750, which is kind of where it is right now, and then look for long from there. If you're trading a breakout strategy, again, look for key areas. 1770, huge point of resistance for us here. If we break above that and have some momentum coming into it, that could be a great opportunity to go long. You could even look a little bit shorter, 1760. We can see how when it, we had that set up as a support level here yesterday. It broke through it. Then on off trading hours, it's been resistance for us at 1760. So even looking at 1760 as a potential breakout opportunity looks great on our charts there. So a couple of different ways to approach that depending on what your trading strategy is. And again, I can't reiterate enough, you've got to have your own trading strategy with a money management plan that makes sense to you so that you have the best opportunity to stick with it. As far as what's happening over here in foreign exchange, coming into the session, the U.S. session started about 19 minutes ago. So the Forex session starts at 8 o'clock a.m. Regular trading hours. U.S. Forex session, foreign exchange trading session begins at 8 a.m. U.S. Eastern Time. Obviously, stock market regular trading hours begin at 9:30 U.S. Eastern Time. So often we'll see the U.S. Forex session start off a little bit of a pop, and then it goes quiet, and we'll see it start to move again as we get closer to that stock market open. This morning, a little bit of divergence. Looks like we've got the USD is a strong currency comparatively to what, though? We've got the Aussie and the New Zealand, both are weak, and the Canadian is weak as well down here. US versus the Aussie, not real attractive to me. That one's already moved 145 pips on the current day, and our average range is anywhere from 120 to 170. So what are the odds of it? Could it continue up? Of course it continue on. No one knows what it's going to do. What is the likelihood, though? It seems like it's for me, it's kind of maxed out its range. That's not very attractive. We're looking when we do these trades, we're trying to pick up 20 pips. What's the real opportunity there? It doesn't mean it can't. It's just saying, is it likely to continue on? And I'd rather not take those odds right now. U.S. versus the pound. So pound USD could be a potential opportunity. Let's see what that one. Oops, made that a little bit too big. Let's see what the pound USD says over here. Again, 167 pips. Average is about 180. Longer term into the 230s, very volatile. That seems to have been contracting a bit over the shorter period. So could it move more? Yeah, absolutely. What's the likelihood? Not really digging it. Today may be a day that I simply don't trade in Forex. Let's have a look at a couple more just to see if there's anything else that we might be able to look at. CAD versus the yen is interesting. I've got the CAD weakening against the yen. Oops, can I drag this over? That one's moved 94 pips on an average of 108. Shorter term is even tighter. Longer term maybe up to 160. It's just, even though the our volume indicator is showing us that we could be looking short on this, the divergence here between the CAD and the yen is looking short. I'm just a little worried about the range on that. So I think today is a day I'm just gonna not do anything with Forex. So there you go. If things aren't meeting your trading plan, don't trade it. You don't have to push the button. Okay, just move on. It's all right. It's okay to not have a trade, right? So let's see. What else do we need to look at? Crypto, real quick. How am I doing on time? I'm doing okay on time. Crypto. Let's pop over here and have a look at crypto. Real quickly, I don't know if I mentioned this the other day. I use a couple of different tabs up here. You guys might have seen fast. Finviz.com Really good website if you just want a quick heads up on what the market's doing. Red or green. It very quick glance can tell you how the market is behaving right now. So coming into the new session, we see a lot of red. The Dow, the S&P, the Nasdaq, the Russell. A lot of red. Even red on metals though down here. You can break it down in a couple of different ways. You can look at your indices. You can look at metals. You can break it out in different ways. But really cool site. I love Finviz. It's a cool, quick dashboard that gives you an idea of what's happening in the marketplace. Two other places I go to look at news: Forex Factory. Really good news calendar, very comprehensive, lets you know what's coming up today. News is important. It's really important in a couple of reasons. News is important when you're trading foreign exchange because high impact news has the tendency to cause our spreads to widen considerably. So think about that for a second. You've got market makers in the market that are willing to buy or sell. That's how we're trading, right? We're coming in as retail traders, and we're the prices that we see, the bid and the ask, are the best prices that market makers are willing to do business. We've got the best price that someone has bid and the best price that someone has put in to ask for buys and sells, right? As we get closer to really high impact news, there's increased risk. So market makers start pulling off their orders, and the bids and the ask, so the spread between the bids and the ask, can widen considerably, and it's usually just for a few seconds, right? It might be for 10-20 seconds coming up to the news, and then 10-20 seconds after the news occurs, and especially depending on what the outcome of that news is, or what the expected outcome could be of that news. So we can see a lot of volatility around that, but with that spread widening, that can be really dangerous, especially if you're trading smaller time frames and you're using tighter stops. All of a sudden you can get blown out or even slipped on a trade and executing your trade just by the spread widening. Nothing's even really happened in the marketplace. News hasn't even occurred yet, but you get this blip where the spread just suddenly widens from, maybe it's a currency pairing that has a typical spread of 2.5, 3 pips. That spread might widen to 7 or 10, 20. I've seen spreads go to like 30 plus pips. All of a sudden they just go bloop, and people go, "Oh, that's my broker's manipulating the market," or "He stop hunting my trades." Everybody has some excuse. It's nothing. It's just legitimately how the market works. The buys and the sells came out of the market because the market makers don't want to get caught on a trade around the volatility of news, and they want to trade under regular conditions, so they remove their orders, and the spreads widen. You see it in futures as well. You don't see it to the drastic extent that you see it in Forex. So important to know, but the whole diatribe, the whole long thing I just went into, really comes down to just understanding what news is coming up and what it could potentially be doing to the marketplace. Forex Factory over here, breaks it down into red and yellow news, and even orange sometimes, depending on the potential impact of that news event. So it's important to look at this for the day. What's coming up? What's happening? These are potentially market-moving events. I shouldn't say they are, because there aren't no definitives, and this gets people scratching their head as well. For me, I want to know when news is occurring, so that if something crazy happens on the chart, I know, hey, that was around a news event, and I can avoid that potential of fear of missing out or chasing the market or whatever it might be. Also, to avoid entering a new trade around that, or if you've got trades on that have a tight stop, you might want to close them down and wait for the news to finish up. So it's important to know what's happening in there. I don't really watch. I shouldn't say. I do look at the outcome, but I don't look at it immediately. I don't try to make my trades around it, because that again creates a bias. And so often, news might come out and it has a negative actual that maybe should push the market in a certain direction. The key word there is should. But maybe the market goes the opposite direction of that. And if you're trading with that bias of, well, the news said that this was negative, blah, 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 and that was a huge variation from the forecast, and the market should be going down, but it's going up, and that can sometimes cause that tendency to overtrade because you're like, why is this thing rallying? I'm going to pick the top. Blows you out. I'm going to pick the top now. Blows you out. Well, this has to be the top. Blows you out. So be careful with that. Know what news is coming up. Know that it can create volatility around it. Don't get too caught up in watching the outcome of the news and then forming a bias around what that might mean. Again, Keynesian theory, the markets can be irrational for longer than we can be solvent. I buy that wholeheartedly. I mean, look at what the market's been doing recently. We've got economies in the freaking dirt. Everybody's on their hind legs playing defense right now. We're just backing up. Unemployment's at all-time highs. And it should be a lot higher. It's only as high as it is because people that are trying to get it can't call in to freaking claim it. Businesses failing left and right. You've got all kinds of stuff going on, just carnage. Earnings for these major companies aren't being reported. There's just, it boggles your mind, right? Anyway, this is why you don't trade with the bias, because if all that stuff and you're letting all that stuff dictate what you're doing when you press the button, you're going to be trading against what the current trends are. Again, the trend is your friend. Follow the trend. Let the market form its bias and trade what the market bias is doing. Don't trade your bias or my bias or the guy on TV's bias. Trade the market bias. Anyway, I wasn't going off any tangents here. I went on a tangent. Anyway, so I was talking about sources. Another great source. A friend of mine, Amar Hussain, out of London, built this site. It's called financialjuice.com. I love this site. I don't feel like it gets enough recognition and doesn't get mentioned enough. It's a news aggregator. It pulls in all kinds of news sources out there and allows you to put them up into one feed. So you can go through and you can choose from all these different news sources and tell it what kind of news you want. Do you want Forex news, stock news, futures news? And you can look at all these different ways to break it down, and then it spits out, as headlines come out, it spits them out up here for you so you can see them really quickly, really easily, see what's going on. He's also got a news calendar here on the left-hand side so that we can see what's coming up, what the forecast is versus the actual and the previous month, so we can see everything that's happening here as well and take your trades. So, or no, I shouldn't say take your trades, but see what's happening and see how that might impact what you're looking at or what you're trading. You see, it just popped in a whole bunch of new updates from Forex Street, FX Street. So, anyway, good stuff there. All right, what's happening in the crypto market? Not really a whole lot. Still in a long bias. However, we're consolidating quite a bit here. Bitcoin's pulling back to that 67 area down here. 67 has been it was previously a point of resistance for us. It broke through it, and it's showing as support now for us. So until this flips over, until the bias changes, which if we close low down here, this may change where my shorter term crosses under my longer term, creating a short bias on Bitcoin. But until that happens, we're still looking at potential long opportunities here because the bias is still long. Until that changes, the bias is still long. So with that said, how do you trade it? Well, a couple different things. If you're looking for that bounce strategy, you could look at 6,700 to bounce off of, because again, we can see that it's been setting up as support here. So we could look at 6,700 for a bounce. Or, if you want to try to break out, then you look up here. We've got this channel that's kind of formed here where we've got tops around really 6,900. You can even go as high as 6,950 area. Look for breaks above that and buy with it. Again, pros and cons to bounces and breaks both. Neither one's going to give you 100% wins. You just trade which one gives you that best opportunity to trade what you're comfortable with trading. Over on Ethereum, same exact deal, a little clearer long-term long bias here. Kind of looks like a duck, doesn't it? Anyway, looking at the it really does kind of look like Donald Duck right there. So we look at a long bias. we'd be looking for pullbacks to key areas. So again, if we it's really further down. 52 is our support level down here, but you could even look shorter if you wanted to really tighten it up a little bit. You could look around 55 as a potential bounce area, or if you're looking for breakouts, again, we can see where we have a pretty clear level set up here around 160 where we've been hitting the head and it's been repelling off of this resistance level up here. We could look for breakthrough 160 and continue to trade long with that long bias. So there we are. Next week I need to figure some things out because I've got some automated stuff that is rolling, and I want to start talking about that as well. But I don't think there's any way to do it in these sessions. So I've got to change things up a little bit to maybe do more. I think I'll start doing a few more sessions to where we can do some focus specifically on some of these automated strategies. This is a Crypto Pro Elite strategy that shows buy and sell signals for us, letting us take opportunities and trade opportunities without having to play directly into doing all the market analysis back here. This is an algorithm that runs and spits out trend trading information, right? It's looking at trends, but gives us potential areas to buy and sell. So that's one that I'd like to start talking about a bit more. I've also got CrystalBot we need to start talking about a bit more. And then over here in the futures market, there's a pretty cool one running as well, which is looking at the Dow and the Russell specifically. Short opportunities on the Russell, long opportunities in the Dow. It's kind of playing them, it's allowing us to go both long and short, but setting them up on different instruments so that we have the best opportunity to kind of diversify and really take the opportunities as they come without just kind of trading in and out on one instrument, which can get a little bit dangerous sometimes. So a lot of things coming up I need to talk more about. I am, as I've mentioned before, really looking to move this year into doing more automated stuff. I'm coming over to the dark side finally, and accepting the fact that machines are able to do a lot of what we do and can do it better because they don't have the head trash working against them. But I do still think that there needs to be some human intervention there. I'm not totally releasing accounts to the computers, but I am moving that direction because again, I feel like it frees us up to do other things if we don't have to spend our time staring at the screens. I'm all about that. So anyway, that's it. We've covered a ton here in a little over half an hour. So if you're still with me, thank you for sticking with me. If you like the stuff that I'm talking about, you feel like it's helpful, you feel like you're getting something from it and are learning something from it, and it's giving you a little bit of an edge, share it. It's all free. I'm not charging anything for the knowledge about what's happening here in the marketplace. Share it with your friends, share it with your family, share it with your co-workers, whoever, right? It's all free. I do have some tools that I utilize, which I probably should talk about a little more here with actually entering trades and showing the tools, but I do have some tools that I utilize that are available on the website for purchase. So that's it. Have a great day. We'll talk to you later. Bye.